What's going on, everyone? Welcome to another Nomad Hedge market update video. So in today's video, we're going to walk through the major indices. We're going to take a look at the dollar and the yields, and we're also going to take a look at the crypto markets and see what we can make of all this. It's been a very interesting week with lots of volatility, Jackson Hole and all that kind of stuff. So let's begin this video by taking a look at the dollar. I find the dollar very interesting now. The fact that we have broken above this lower high trend line. But what's even more interesting, if you take a look at the USD Euro chart, we have to remember that the dollar index is 60% comprised of the euro. So we're seeing here potential resistance right at this area here. So this trend line can act as resistance. And I'm not sort of like convinced of this rally towards the upside until we've actually broken above 104.7. Okay, so higher dollar typically means that equity markets are going to take a breather, and the same thing could be said with the yields front. If we take a look at the 10-year here, I'm in the camp here that the 10-year has peaked, and this is a clear double top we're seeing here. We saw a little bit of a throw over here at wave 5, so I do suspect this pattern looking a little bit wedgy here. So I think we're due for a pullback here, if not a very sharp pullback, since we have completed 5 waves up here, and this could potentially be the completion of wave B as well, since wave A is now done. I've seen the media talking a lot about the yields, and to me that's just sort of like an indication that the yields are peaking, and the same thing could be said here with the 2-year. You're seeing this double top potentially, but if we use some Fibonacci levels, we can see that we have 2 potential targets here for wave 5, and that means that the 2-year could continue to spike here, and we could see the 10-year start to fall. So the 10-year could eventually lead the 2-year here. But again, if you take a look at the structure here, we're seeing a potential wave 1, 2, so we could see another impulse up here, and that would be the completion of wave 5. And one other way to look at this is, one could draw a lower high trend line here on the RSI, and you typically see a negative divergence in price, right? So you see the yields rising while there's slowing down movement. So that's a typical wave 5 price action that we're seeing here. So I expect the yields to come down, especially the 10-year. The dollar is interesting. Now, if the dollar continues to spike from current levels, this is the potential area of the resistance that I'm looking at. So this will be the make or break it. If we're getting a solid break above this 104.7, I would say, then the markets are going to take a hit, as well as the crypto markets. So let's take a look at the S&P here, see what's happening. Jackson Hole here on Friday, we saw buyers and sellers basically fighting. And if we zoom in, we can see that we completed right at this 0.786 level. So we better hold this line of support, and if not, we could potentially see this thing as a head and shoulders, right? So we have the left shoulder, the head, and the right shoulder here. Now this would imply a target to around, I would say, 4,100. I mean, if we would break the support here, there's a lot of demand here. I mean, we could take a look at, there's demand there. This has acted as resistance. You can go back in time and say this is a very strong area of support. So, the August 18 low better hold up here, or the S&P is going to drop sharply. Now, I'm in the camp that, this could potentially be an A wave here, and then we could rally up here to 45.67, closing this open gap, and then we would see another swing down here, an impulsive down here to wave C, and that would also bring us about to closing this open gap as well. So I find it more logical for the S&P to play out this way, but watch this low here, August 18th low. If we break this one, we can see a large drawdown here in the S&P. So another thing to mention is obviously the Nasdaq 100. It's basically the same price action here, but what I found interesting with the NDX, you can see here, let me open this one a little bit wider. We do have a trend line that's holding up for now. So we defended the trend line here on Friday. So the NDX better rally here, just like the S&P. We do have an open gap. You know, everything is trading basically in parallel here, but this trend line here suggests that we have found some solid support. If you take a look at Dow Jones Industrial Average, for instance, I would say this has reached its bottom here. Okay, so based on these Fibonacci levels here, you basically have a retracement of 0.786, and at the same time, this is the 100% projection. Okay, so you have two confirmation levels that the Dow Jones have bottomed here. We could have a potential head and shoulders here, and that means new lows are coming. Okay, so now I want to take a look at the inverted yield curves, especially the 10-year minus the 2. So as you can see here, this pattern here is also wedgy, right? So this suggests that the 10-year is going to fall. Okay, just like we're seeing here with these two resistance levels, that double top. If the 2-year starts rising, you would also see the 10-year starts dropping as well. So eventually we would start seeing some support at these levels, and once we hit support, that's when the 2-year will start dropping as well. Okay, so again, we have an ABC pattern here, and once the 10-year starts to normalize against the 2-year, you could start looking towards perhaps some recessionary signals. And watch out for an inverse head and shoulders here, because eventually if we rise here and take a breather, that's when perhaps the recession starts kicking in, and we could finally make new lows here in the major indices. So super important to watch the 10-year 2-year spread. For now, I'm in the camp that we will see a stock rally in the beginning of next week. So that's pretty much here it with the major indices. Let's also take a look at the crypto markets. We do have Bitcoin. So if the market's going to rally here, I see this level of resistance possibly for BTC. We're looking at around 27,500. Once we hit this area, I think that's when we're going to see another swing low here. There's this CME gap that I've always been watching. Eventually we will have to close it, so we're looking at levels at around 20,000. We could also apply the Elliott wave patterns here, and this could potentially be 1, 2, 3, 4, 5, right? So we're looking at perhaps these levels here. If we don't find support at around 23,000, 22,000, we can look towards this open gap potentially, and then we can make a double bottom here, and that's when BTC will start rallying from these current levels. Just a pure speculation here, but I do think that BTC is set to rally here, make another bounce up here to either 0.382 or the 0.5 retracement level. We could also take a look at how Ethereum is faring out. You know, it's the same thing here. We're basically trading here within this channel, and look at this area here. Now I'm gonna zoom out and you're gonna watch carefully. This is basically a trend line going back to 2016, early 2017, and we are almost defending it. Okay, so this is the third time now that Ethereum is hanging on to this trend line. So Ethereum better hold this level, or we could see far greater lows here. I mean, we do have a confluence of trend lines here. I don't want to sound too bearish, but I'm looking at, you know, sub $500, believe it or not. So this trend line here is going to, I mean, this is make or break. You know, this is super important that we hold. It's sort of like Binance, right? Here's a weekly chart of Binance, for instance. You can see here back in 2017, that's when the trend started. If BNB starts falling here, you would technically see all altcoins start to fall rapidly as well. So this is a very, very important level here for Binance and Ethereum to hold. These trend lines matter. Okay, so it's super important that we hold these trend lines, or we're just going to see more lows here. So let me get back here to BTC. So we can see here that this area of resistance here, support is holding for now. Okay, we break the support, this is the next level. Okay, so we're looking at the lows here back in March of 2023, and this is $20,000. That would be a logical area to find support for BTC. Now, unlike Ethereum, if you look at the trend lines here, for instance, we've already broken below it. Okay, now BTC is trying heavily to get back here, but we're not making it. So this is why this rally here looks corrective in nature. So that's what BTC has to do. We have to get above this trend line to be back in a bullish trend. because this is not a bullish trend we are right now. We're just retesting, and we haven't even made it towards this higher low trend line here. So either we find support here and try to rally again, find some footing, or Bitcoin is simply just going to fall further. And watch this line here. I mean, yes, these are two trend lines here that have confluence, so this could be a very rapid fall here. And what they typically say in Elliott wave is that typically you would see wave C correspond to the length of wave A. Okay, so there's a high possibility that this drawdown here could be just as much as what we saw previously. Now, I don't want to sound bearish at all, but this is the long-term perspective basically, and we have to get above these certain levels, and BTC has just proven that we are below these levels here, and the altcoin market is just at this, you know, where they're nibbling on perhaps getting below their long-term trend lines as well. So for now, I'm in the bullish camp here for the major indices. I think we're going to see a sucker rally here next week. We pretty much priced in everything regarding the Jackson Hole. The markets are heavily oversold, and you know, we're due for a sucker bounce here, potentially closing some open gaps, and then we will see another drawdown here to wave C. So that's my take on the markets. Expect some more volatility next week. And while we at it, let's also take a look at the VIX here. And you can see here that the VIX found resistance here. We back tested this trend line here. Okay, then we saw a huge drawdown here on the 25th. Okay, so look at these open gaps here. We closed a very subtle minor open gap here. We left one open here, but again, these open gaps needs to be closed at some point. So if the VIX starts to fall from current levels, one would assume that the markets would take off at some point, right? So with the VIX falling this much on Friday, that's why I'm looking at perhaps the potential here for a sucker bounce. And again, I mean, we're priced in pretty much everything now. The Jackson Hole has been priced in. There's nothing else actually up until, I would say, the next FOMC meeting. I think that's going to be by the end of September, or September 20th. So the markets could basically take off here, do its thing, work out these oversold levels, and then we'll just have to see how the market's going to react in the future. So I'll keep you guys updated. You can follow me on Twitter or X, and my handle is Nomad Hedge. I post interesting daily charts. I'm trying to reach 500 followers so I can provide a subscription service for those who are interested in my trades, and that's going to be available very soon for those who are interested. But for now, you can get daily doses here on my Twitter handle, and I'll keep you guys updated as always. Gonna post another video on Tuesdays. So I'll see you guys in the next video. Take care for now. Have a wonderful weekend, and goodbye.